Bitcoin halvings reduce the rate at which new Bitcoin is created by half. Halvings are an automatic process built into the network, and they occur each time another 210,000 blocks are mined, which normally takes about 4 years. Hey there, my name is Trevor with CMC, and today we're going to be talking and discussing Bitcoin halvings, what they are, why they happen, and why you should care. When Satoshi Nakamoto created Bitcoin in 2008, he realized that he needed to release Bitcoin gradually into the market in order to prevent early adopters from hoarding it, which would have slowed adoption or even stopped most people from using Bitcoin at all. After deciding to limit the supply to 21 million coins, Satoshi implemented a mechanism which would release Bitcoin in a predictable way over time, every 210,000 blocks, which we call a halving. Halvings mostly affect Bitcoin miners who confirm Bitcoin transactions and add new blocks to the blockchain using computing power. The network rewards miners with Bitcoin for their work, which is how new Bitcoin is created. After each halving, Bitcoin miners receive half as much Bitcoin for their services, and this makes mining more competitive and also encourages miners to source cheaper sources of fuel to also power their operations. And it might seem illogical for miners to continue working for half as much profit. However, new Bitcoins are scarcer after each halving, which should increase the value of each coin. Indeed, price data shows that historically, Bitcoin does increase in value after each halving, thereby helping miners recover lost earnings. However, just because something has happened in the past doesn't mean it's guaranteed to do so in the future. And the Bitcoin mining reward will have 32 times before Bitcoin's full supply of 21 million coins will have been reached. And this should happen by 2140. So cheers to us not alive. And to date, 19,370,000 coins have been mined. Before the first halving, Bitcoin miners received an enormous block reward of 50 Bitcoin per block. But as of May of 2023, after 3 halvings, the block reward has been reduced to 6.25 BTC per block. And over time, the impact of each halving will diminish as the block reward approaches 0. So what happens during the last halving? Well, the last halving took place on May 11th of 2020, during the height of the pandemic. Bitcoin's price increased by 19% during the year, leading up to an event from $7,191 to $8,568. Over the 546 days following the halving, Bitcoin rocketed 688% to $67,549 per coin, which is its all-time high, which was reached on November 8th of 2021. The preceding halving occurred on July 9th. Bitcoin's price increased 142% during the 12 months preceding that halving, from $269 to $651. By Christmas the following year, Bitcoin's value had soared 2,824% to $19,000, which was its all-time high at the time. And similarly, the first ever Bitcoin halving in November of 2012 saw Bitcoin's price increase 384% from $2.55 to $12.35. When is the next Bitcoin halving? Well, the next Bitcoin halving will take place at block 840,000, which is estimated to be on April 7th of 2024. And this is about 300 days away at the time of this video. So on this date, the block mining reward will drop from 6.25 Bitcoin to 3.125 Bitcoin per block. Bitcoin tends to bottom 12 to 18 months prior to the halving event, and historically has performed well leading up to the halving catalyst event. So do Bitcoin halvings change the price of Bitcoin? Well, as shown here, past halvings do seem to have an effect on Bitcoin's price. During the year following every halving, Bitcoin's price has risen between 384 to 2,824%. But that doesn't necessarily mean that halvings impact Bitcoin's price. It's possible the two events are correlated, but that halvings don't directly influence the price. The next halving could see Bitcoin's price rise by 81%, according to Bloomberg Intelligence, but not everyone agrees that such a bull run is written written in the stars. The second halving, for instance, saw Bitcoin's price increase by nearly 3,000%, but it happened at the time when Bitcoin was being covered extensively by the media, and its positive price momentum was already very strong. It also coincided with surging interest in ICOs, or initial coin offerings, many of which required investors to buy Bitcoin before they could get involved. It's also worth noting that Bitcoin's price has historically sat consistently higher after each halving. Before the 2016 halving, for instance, Bitcoin's value generally hovered at around $600, whereas after the halving, its value rose to about $18,000 and then hovered between $3,500 and $12,000 until the subsequent halving in 2020. The same pattern can also be seen following the 2020 halving, after which Bitcoin's price has hovered between $20,000 to $35,000. So how do Bitcoin halvings affect miners? Well, after the third halving back in 2020, CoinMarketCap actually spoke with Shixing Xinyu Mao, who founded Bitcoin mining pool F2 Pool, about how the decrease in block rewards affected the Bitcoin mining industry. Mao said that the loss of profitability for miners had not been greater than they had expected. He did note, however, that a Bitcoin halving event means that miners have to decide if they can afford to continue mining, and that might mean looking for lower electricity costs, and also other ways that they can save on overall costs to keep their mining machines running and also earning new coins. Some argue that the price increases Bitcoin has experienced following past halvings have more than compensated miners for the lower number of Bitcoin earned for mining each block. To put it another way, miners are earning fewer Bitcoins, but those Bitcoins are worth more than double what they were before the halving. So what are your price predictions when there is the Bitcoin halving that happens in close to around 300 days? Let us know in the comments down below.